Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Nithin, welcome to the Investor Hour. Delighted to have you. So this is an episode I've always wanted to do, but did not do it till now. And primarily because cryptos is something way away from the domain I kind of operate in or understand. But I think the recent episodes have just made it, all that much more essential to do it. So, thank you for agreeing and thank you for taking time out to do this.
Thank you so much, Rahul, for having me here. Always a pleasure to chat with you.
Wonderful. So let's a little bit of a background. You are also called your Twitter handle, and I think people refer to you as the Crypto Swami. So what's the backstory to that?
See, the backstory to that is nothing. Instagram. So initially, I'm old school, right? I would say you and me, we are kind of, let's say, the old school as far as social media is concerned.
Yeah.
Okay.
Mm-hmm.
So obviously, I have my LinkedIn with my name.
Okay.
Instagram with my name. My kids told me that's not how you make an Instagram handle.
Okay.
Okay. So what do you make it? So I like crypto, and I've always loved religion, gods, mythology, and stuff like that. Okay.
Mm-hmm.
I think the only thing that makes more money than finance is all right. Like we are in the financial domain. Why? We invest in stocks. Why? We're trying to get return on it, right?
Mm-hmm.
So earlier itself, a long time ago, I heard this this analogy by some monk who said, "Listen, if you want to, you become a farmer, to sustain life, then you get educated. You try to become an engineer. He said you'll make around maybe 10,000 rupees. You try to become a doctor, then you'll make like 30 or 40,000 rupees. Now, the no-gooders who then their frauds become politicians, he said, they'll do a scam of 5 crores and stuff like that, or 10 crores. He said, you become a monk like me, people will drop 500 crores at your feet. You don't even have to. So I thought, why not? So I just made the handle Crypto Swami.
Yeah, it's a very catchy name. Yeah. And I think we've spoken many times before. We met and, we try to learn from you on how this whole space operates. And I think that name suits you because it's also
the bald head and everything, right?
And the other reason is, of course, you're able to articulate very well. A real Swami articulates well and explains well. So,
Thank you.
We're looking forward to this session. Okay, before we get into the nitty-gritty of it all, could you just quickly give us a little summary of your journey? You were born in India, and
Yes,
just take us through, till now.
I don't have this. I'll tell you upfront, so for the viewers, that I don't have this story where it's like a rags to riches story or anything like that. Okay, that I know that sells better when you say that you had nothing. No, I came from a very ordinary family. Parents were there. It's not like they provided me with everything that a guy should need, actually, all that stuff. Mostly in Kerala. I did a short stint in the Middle East. My parents from Kerala, right? A good chunk of people are in the Middle East. We actually rolled there than in Kerala or in India, actually. So big immigrant community. So in the Middle East, and I did my engineering in Kerala, then worked for some time. Yeah, moved to the US for studies initially, started working. I was a manufacturing engineer. Never liked the job, actually, because I was a fish and I was trying to climb a tree. So always interested in finance. I started trading at the age of 16. This was earlier than the Harshat Mehta times, or during that time. So as I said, started trading stocks at a very young age. So always was interested in finance. And as I said, came here, went from manufacturing to IT, became a programmer because, well, that paid more money. Then I always had it within me to somehow become a trader with a big bank, the bulge bracket banks. Eventually landed there as a market maker. I was doing options, exotic derivatives, did the whole thing. Then in 2009, I started my own company. more technology services related company. Again, by a stroke of luck, it just happened. Didn't plan for it or anything. That grew to a multi-million-dollar firm. And then obviously I read the Bitcoin paper. And once I read the paper, I had this whole libertarian mindset where I believed in the freedom of people. I believe that humans are designed to be free. And we are all always under bondage because of some kind of entity, like a government, whether it's a monarchy or democracy or something like that. And then never look back, and been always in this space. Just love reading about it, because this whole thing contains everything about finance, sociology, psychology, political science, economics. It's a mix of all this. So I get a chance to read, understand the human nature and the nature of money. And just been spending my time trying to educate people after that, because I thought this is the greatest thing ever that I could come upon.
So the paper you're referring to is that famous paper by Satoshi Nakamoto. I hope I got that right.
That is the paper, the Bitcoin peer-to-peer cash paper.
Would it be fair to say that you know who Satoshi Nakamoto is?
No.
But you're not.
There are a lot of guesses out there on who he is, but end of the day, no. It's there's this guy who people thought he is, but anyway, that person, he passed away. He had ALS. But there are guesses over that. Otherwise, no, nobody knows, because he has a bunch of coins that, he was the first guy who was mining. So obviously he has a bunch of these Bitcoins. They've never moved till date. So those 1 million Bitcoins are still there, but they've never moved from one wallet to the other. So those 1 million
Bitcoins, they're worth $16 billion now, right? Roughly?
Roughly, they would be worth 16 billion right now, but they've never moved from one. So he's never sent out a piece from his wallet to somewhere else. So everybody's hoping that is Satoshi's wallet. It's a guesstimate.
It's a guesstimate. Yeah. Okay. So when was this that you came across this paper? Which year you're talking about? 2010, 11?
So initially, my friend sent me this paper in 2010, actually. At that time, I didn't read it, or I started reading it and I didn't get it. Okay. I didn't give it enough thought. The real thought happened later in the 2014 when I read it, and I'm like, this is it. You spend it's a very small paper. It's less than 10 pages. So it's not like it's some massive research paper. No, but you have to spend a little time to understand what it is. It's not highly technical or anything. It explains how he wants to achieve this, how he wants to achieve decentralized money or this process. But once you read it, so by the time, obviously, when it came to the later 14, 15, 16, it's not like I was the only guy who was getting it. There were a lot of people who had explained this online. So I had a lot of doubts. So you could go to these YouTube videos where the Andreas Anantopoulos, people like that, who were explaining this, what this is, how to think about this. It was thought, the thought got changed. It's like this, okay, all your life, imagine you've lived under a monarch and somebody told you democracy is possible. You'd be like, how is that possible? Like I always tell people in the 20s, if you had gone to anybody in India and told them, there's this concept of democracy, all right? They'd be like, okay, it's a great concept. But what if the loser does not step down? It's a very logical question, right? How can it be? Because you're used to the monarch. What if he doesn't step down? So same way, you're used to government fiat money, and anything else would be like, oh, it's not possible. But there is the realm of possibility that you're not used to. You can't think about it.
Yeah. So we're going to talk a little bit. Of course, a lot of our time is going to be devoted to understanding what that is. But just for our understanding's sake, so you came across this paper in 2010. You're trying to learn and study it, etc., etc. When did you first treat it seriously enough to actually go and say, you know what, it's worth some of my money, so I'll put at least some of my money? When was that?
It was 14.
2014.
14, yeah. 14, I decided that this is it. I kind of knew, it's that feeling like when you make a bet, okay? When you make a bet, you always think that by the way, it's, when you say it's still a bet. It's at best, it's a gamble at that point, right? You have that feeling that, oh my God, this is awesome. Somebody else hasn't seen it, or everybody else is going to follow. What if you can become early? Yeah, by that time, I'd realized in life, oh, I'm not going to find the next unicorn, or I'm not going to make the next unicorn, I thought, because I didn't feel that I had it in me. But I always thought that if somebody else is finding the next unicorn, what if I can invest in that, was always my thought. And I thought this was that biggest unicorn,
And
as a single.
that time it was what, a couple of $100 or less?
$200.
$200. Wow. Okay. So now you're talking to an audience of one right now who doesn't get it. So what exactly is a cryptocurrency in your view?
Okay. So see, there is a layman's term and a technical term. Okay. So let's go with Bitcoin. Okay. We won't just say cryptocurrency. We'll get to cryptocurrency later, because Bitcoin is the granddaddy, and it's much better to explain that, because there are no scams involved in that. All right. That's why I'll use that. Okay? Because many cryptocurrencies are realistically, they are absolutely scam. It is written over there, we are a scam, but still people don't realize it. So many of them are scams. I'm not saying everything is a scam. Okay.
Yeah.
So Bitcoin, fundamentally, if you look at it, technically they say it's a chain of digital hashes. That's technically what it is. Okay. But let's forget, which means mumbo jumbo. But in very layman terms, I'll tell you, it is nothing but money. In very simple terms, it's money. Okay. So what is great about money? Well, you have a lot of monies out there. You have the US dollar, you have the Indian rupee, you have the UK pound. So this is also money. The difference of this money is, this money can be transferred over the wire. Wire means the internet, without a middleman. Now, that is what is so powerful or breathtaking about this technology. So think about an era before internet. Just think about the 1992, when we were young kind of era. At that time, could not think of getting news out by today, like in WhatsApp or an email. We can't dream of that. So when you send an email today, nobody can stop you from sending an email, because if one computer is down or one node is down, it will find another node and eventually it will reach the destination. Before that, if you wanted to send news, there was a centralized agencies who decided what was news. Is it worthy? Or the government decides what is news. In money, the same way, a centralized entity called a central bank in India or Federal Reserve, along with the government, they decide, they are producing the money, means they print the money and they distribute the money, and they decide who can be in the system of banks. They can decide, Nithin or Rahul, you're not in the system. With the internet, nobody can stop you from being on the internet. Same way with Bitcoin. If you decide to become a participant, nobody can stop you. They can't say, oh, you're an old person, you're a white person, you're a black person, you're a male or female. They cannot stop you. The moment you're plugged in, you are part of the system. In the banking system, they can decide that your company, they can confiscate you, or they can say that, or you are a person who makes hate speeches, we're not going to have you on the system, or you are selling marijuana. It's in the US. I'm telling from a US perspective. Okay. Yep. So it's fundamentally a way to send money over the wire or value over the wire without a middleman, which is powerful, is what the reason is.
Okay, so no middleman is a key sort of advantage or strength. So, if you think about money 100 years ago, money was backed by a real asset of value, right? Be it gold or be it whatever. There have been various backers. Let's say gold.
Gold.
Now, I guess, the famous peg, 15th August 1971 or whatever it was, the US says, hey, we're not going to honor the peg. The dollar is the dollar. You can't come to us and convert it into gold.
Gold.
Right. But there was a phase where it was backed. And today, I think it all works on what is called a minimum reserve system. They have some reserves, but they can't really exchange all the currency for another alternate asset. The Bitcoin from get-go doesn't have anything behind it, correct?
No, it does not have. It does not. What you're talking behind is, you're talking about something physical behind.
Physical,
right?
Yeah.
Physical behind, yeah. So that is one of the key pieces, okay? The US dollar or fiat, any kind of fiat, fiat was created so that some form of a king could easily print during a wartime. Okay, all this money is more required for a king during wartime. Money was not created by kings, just like language is not created by a government or a king. So money, it's what I was saying is it's issued by a government or a king, and he uses it during wartime. That's what he really needs it for, when the king has taken over money. Even though money is made by humans to enable transactions between us, we are just exchanging value, all right? The problem with that money when a king is issuing it is they will start printing more, because during war times, they need a lot of money because nobody's going to fight for them for free. They just want to expand. Okay. And that debases money. Okay. And if it was real gold, you can't print gold. So they made some money on top of gold. In the US case, the US had the US dollar. There was backing or a pegging to this gold. And in 71, they understood that they printed way more because of the wars, the Vietnam War, the Korean Wars, or whatever. They can't give the agreement. The original agreement was you bring the dollar, the government would give you gold back. When they knew that there wasn't enough gold, people are going to ask for it. They just said, hey, from today onwards, we are just breaking that agreement. But again, over there, the backing thing was gold, this yellow metal, right? That is the thing that you're giving. Now, realistically, what is the value of that yellow metal? It's just a yellow metal. You can't use it for anything except jewelry. Besides that, there's this shiny jewelry that you can make. It's not like you can eat gold, right? Nothing like that. So this shiny metal, we are attributing value and a price for it, all of us together. So today, like let's assume today, $1,900 an ounce gold, okay? So let's assume tonight it's early morning. I know that it's 1,900, and let's assume let's say the market opens at 9 o'clock, and I'm going to buy gold because my spouse asked me, my wife tells me, Nithin, I want some gold. I go to the market, I'm taking $1,900 with me, I have the money, I go there. Let's assume everybody else, including you, Rahul, is only willing to give $100. I'm not going to pay $1,900 anymore. So the price of gold is something called a social consensus between us. Or it's a collective delusion. We are attributing that price, or we are giving this value for whatever reason, because we don't believe maybe in this printed money. That thing, that physical thing, the price that we give that thing is, again, it's just in our mind. There's nothing, it's not, as I said, you can't eat it. Majority of the people in the world don't wear gold. It's only the Indians, by the way, who make jewelry out of gold, right? Or very few people. Or what is the useful thing out of it? There is nothing. It's in the mind. So same way, Bitcoin, the only difference was fundamentally it did not have anything else. It just said, hey, this is unique. Just like gold, this piece is unique and it's fungible. Now, initially people attributed a value of 1 cent to each Bitcoin. Then it became 10 cents. As more people came in, when the demand goes up, it became $1, $10, $100, 1,000, 10,000, 60,000. But what is it? It's a unique thing. It's fungible. And you know that when you buy it, it's yours. What is gold? It's this thing that people can't print, or a government cannot print it, indiscriminately. You know that there's only so much of gold, and you had paid $35 once upon a time for it. There is no interest. It doesn't give you interest. There's no cash flow. At some point, you decide to give $70 an ounce. At some point, you decide, I'll give $200 an ounce. And now you're paying $1,900 an ounce. But there is physical something here. It's just that the physical thing is not there.
So the thing that works for gold is they have thousands of years of history that
Yes.
It has survived as the medium of exchange.
Mm-hmm.
In the sense of store of value, and you can it's fungible. You can go readily sell it and switch it. So I kind of agree with you that the price we attribute to gold is a made-up price. It could be, I guess, it could be influenced by the cost of mining, the fact that it is relatively scarce. It is relatively scarce, and that is worked to his advantage. But in cryptos, in Bitcoins. It's scarce. I think there were 21 million. What's
Million.
21
million.
million Bitcoins.
Yeah. Mhm.
And apparently there'll be no more of those. So there's
Yep.
a scarcity element there. Whether it's fungible, I guess all the exchanges and all which have come up have made it fungible. You can convert it almost readily.
Readily.
But what it doesn't have is a track record for having existed for long. And therefore, I guess that's what makes people a little nervous that what if it's not there,
20 years from today, right? See,
Yeah.
that is the piece that the gold advantage or fiat advantage today, what they have over Bitcoin is the time frame that they've been there, or the general acceptability is more for gold or for fiat.
Yeah.
So Bitcoin is only 14 years old. They cannot get that. But I'll tell you this though, when you make an investment in, let's say a big hedge fund is making, a pension fund is making an investment in something, 3 years track record is considered very good, right? When you're making an investment to a mutual fund
3 years
or a hedge fund, 3 years is considered a great track record. So we are running on 14 with zero downtime. And if you draw the graph from 2009 to right now, if you take the small segments of it, you can see it going like this. But if you take the long segment, it goes like this. It's up and up and up. I consider that a pretty good, graph to invest at that point.
Yeah, so I think you're right. As people who follow the stock market, it's like a small cap company, right? It's very volatile, but it's grown over time. But there you have a cash flow. Here we don't have a cash flow, so that's not the best example.
Mhm.
But tell me this: in case of crypto, in case of Bitcoin, right? There have been so many other cryptos like Bitcoin which were a medium of exchange, which have gone bust. Let's avoid the scammy part of it, right? There was willful fraud and scam. So, and they all are doing well or they're not doing well. Just like the US dollar, right? The US dollar survived and the others didn't. But there are reasons for that, possible reasons for that. So how does it work? How do you differentiate Bitcoin from another coin called Ether or anything else? And are they all, how do you look at them then? As a basket, or do you look at them as this is the one that's going to make it? So I'm not sure I'm framing it well, but I just got a lot of questions on that.
You're comparing. So we can see, as I always say, we'll try to take multiple analogies to try to explain this, because one thing alone won't be correct to explain this. It's like looking at that, the Buddhist tale of looking at the elephant, right? Blindfolded men who have never seen an elephant, they're touching different parts and saying, okay, the guy who touches the tail is saying this is like a snake. The guy touches the ear saying it's a fan. And then they ask, is this why this is called such a majestic animal? So you have to be able to take the blindfold, look at that elephant for its entirety. Okay. So if you look at the piece that, this is like digital gold, or, our rupee is also digital realistically. If you look at only from that one perspective, it is not majestic enough. So Bitcoin, when it was made something called, like, it does a very simple thing. There's nothing complicated about Bitcoin. You can send it from one place to the other. All right. Means you can move this thing. It is considered like a store of value and a medium of exchange. That's it. There are not many other things you can do, but it's not very easy to do. Let's put it that way. All right. So then when this Bitcoin was there, it was running, or, imagine like an Apple came with an iPhone, or Ford came with the Model T. Do you remember the 1990? And Ford used to say, you can have the Model T as long as it is black. All right. So he was very particular that I will only sell it in black. Well, GM decided that they're going to make in multiple colors, and lo and behold, before you know, people have things like, I want to buy a different colored car. I don't want a black car. And then Ford had to change his model too. Otherwise, they wouldn't be in the market, right? So when Apple came with the phone, Steve Jobs made a great idea. He put the phone, but he said, oh, you can't do those kind of things because I'm saying so. Well, Samsung decided to give those options. And Apple had to change its plan. Otherwise, people would be buying those phones, right? So same way, Bitcoin does only one thing. It's very simple. They're saying they're money, and you can send money, you can store money. When Ethereum came up, what Vitalik and those guys had in mind was they've said, we're going to make programmable money. So there was money, and he said, we're going to make programmable money. Now, what is programmable money? So think of it as a contract. Let's take real world contracts in this world. Everything that we do has an implied contract underneath, right? Means if I do this, you're going to do that. Some of them we spell it down in a piece of paper. Right? And then if I do X and if you don't do Y, I have to take you to court or something like that, because you are not honoring your part of our agreement or our contract, whether it's implied or written down. So with something called a smart contract, there was a concept called smart contract written by Nick Szabo. The piece is, if I do X, so think of it as a program or a code. If I'm I'm calling a function which says I will add two numbers. If I send it two numbers, and if it adds it, it'll give a result back. Every time it will do that, right? It won't decide halfway in between that, you know what, I'm not going to honor Rahul's contract of adding these numbers. This thing is code. The code can only do things it's explained there. So smart contracts are something like that. So Ethereum wanted to make this world computer which runs across the world, and it will do things like the smart contract and stuff like that, which is like you're programming your money. Like now you can do financial services on that piece without a middleman. The other one is just money. Now we want to do trading, we want to do insurance, we want to do lending, borrowing, etc. Everything things that you do, services that you do on top of money. That's what their goal is. So everybody's coming with some goal like this, but at the end of the day, many of them won't survive. Let's say there are 10,000 coins out there. How many do we realistically are bothered about? 5 at best?
Yeah, but if you look at the world of currencies, there are only so many you trust. The rest are just depreciating.
Same with stocks. Same with stocks, whether in the US or India, there are plenty of stocks out there. We are looking at Nifty 50 or S&P 500, right? Yeah. The rest,
So Ether is, take it with a big, pinch of salt. Ether is like a Bitcoin plus additional features, which you can do more stuff. It's more useful than just a standalone Bitcoin. Bitcoin is
exactly.
Okay.
Yes, that is what their goal is. All right. Obviously, as a small upstart, their goal is also to replace Bitcoin, right? They want to become the store of value plus the medium of exchange plus this plus that. Okay. It's just that nobody has replaced Bitcoin yet.
Okay. So one question that comes out for Bitcoin every time is that 21 million Bitcoin limit sacred? Because the reason I ask is, in the paper currency world, like you mentioned, someone wants to go to war or fight a pandemic or do anything, they'll just print a whole bunch of money, right? What if tomorrow Mr. Nakamoto, let's hope he's, hale and hearty and living somewhere, and decides, 21 million is too few, let's do 42.
Got it. How do we stop that? So Bitcoin is something like, it's like, okay, let's assume it's just you and me in this system. So let's say it's you and me. So we decided initially it's going to be 21 million. So in between, if we want to get it to become 42, we have to get 51% of the votes to agree to make it 42. So let's say you want to do it and I'm not agreeing, we can't do this. Okay. So now let's say there are 3 of us, you, me, and person C. Now, if you want to do it, you have to somehow coerce him, bribe him to be part of the system and tell him, hey, both of us, we're going to vote. Let's make it 42. Let's forget Nithin. He's not agreeing. He's just being stubborn. And I think 42 is a better number. All right. Easy, not so hard, right? Now imagine it becomes 10 people. Now you have to bribe 5 more to vote with you, right?
I get the picture.
Bitcoin right now has, I believe, mining machines might be more than 1 million. There are developers over there. Then there are these nodes that are running, which is like 20,000 or 30,000 nodes. You have to first find all these people. You have to, if 51% does not agree with you, it becomes harder as the system is growing, how many people do you need to coerce or bribe to get this executed? It becomes, for all practical purposes, it becomes very hard, is my point.
Great.
Otherwise, yes, you can change it. I'm not saying it's not changeable. The only problem is, how do you change it? How do you get people on board? And if you can get that to happen, which I could say, good luck with that, with 10,000 people over there, then you can change it. It's not like it's not changeable.
Yeah. So the difference is, in case of paper currency, in a system like the US, one guy can take the decision to go to war, and you have to print. You have no choice. You have to pay
Right.
the bill.
Same thing, like take Facebook. Mark Zuckerberg can decide that, I'm taking away the like button. Yeah. No matter how the users decide, he's got the voting shares of the company, right? He has the voting shares. He can decide, that's it. Or Reliance can tomorrow, Ambani can decide that we're not going to be in oil exploration anymore, even though that is profitable. We've decided we're going to be in the food business, and that's it. There's nothing you can do. He doesn't need the other people's vote to decide, because it's a central hierarchy. The guy at the top, even though he's reportable, he's reporting to the board and everything, end of the day, his clout is much bigger.
So so I'm trying to recap what we're absorbing right now is that typically when people think of, let's say, Bitcoin, they are thinking it's Hawa, right? There's nothing supporting it. There's nothing behind it. But the fact is that if you actually think of paper currency, you even think of gold, it's a made up price because there's a market. And the price is a function of various things. It's demand, supply, availability, scarcity, and all that. Yeah. So from that, if you think like that, and if you're wanting to be flexible in your thinking, there's a lot of overlap between the two. In terms of debasing, which means printing a lot more, in a paper currency, we all know how it's done. Every government runs a fiscal deficit and they print money every year.
Just print it.
In this case, it's fixed, but it's not permanently fixed. But to sort of change the amount of Bitcoins, you need tens of thousands of people to actually come and vote and agree to that. And that's when you can do that. So the process is more sort of complicated. It's democratized. Everyone has a say in it, I guess.
It's like, will you, like, let's put it this way, Rahul. Assume you had 10 crores with you, okay? And you know that the government is tomorrow going to print another 2,000 crores. You don't want that to happen, right? But you don't have a voice. So imagine all the people who are owning Bitcoin, and one guy is coming and telling, even though, let's assume he's Satoshi himself now. Let's say Satoshi himself comes and says, I think, guys, I made a mistake. We should have had 42 million. All the guys now who are owning the Bitcoin, who understands that printing more is debasing money, they're like, I don't think we want to vote with you on this. You don't have that say anymore, realistically.
Yeah. And the other thing is that when we think of Bitcoin, it's got a very basic use case, which is transfer and effectively store of wealth. But Ether, what they're doing is they're trying to make it more useful by enabling it to do more tricks, right? Be it contracts and all that. Okay. Yeah. I guess so. I think so far so good. Now, you mentioned a while back that a lot of currencies have literally the word scam written around them, right? So take an example and help and contrast that with the Bitcoin for us. So we'll know what to look for and what the difference is.
Got it. Okay. So I'll take one or two examples. Okay. I always tell people, so right now, with all these scams, and every time some exchange goes down or some coin goes down in price, somebody's always sending me a WhatsApp or something. See, I told you this is going to zero. This is a scam, right? So right now, everybody's sending the Sam Bankman-Fried thing. They're like, oh, Alameda has gone down. This is what you were telling about crypto. So I always tell them in examples, because a lot of these are my Kerala Mallu friends, okay? So in 90s in Kerala, there used to be these schemes, okay? The schemes were that, you invest with us, we're going to buy goats, the animal, the goat.
Yeah.
They would say, you'll get 100x your return, okay? Because some special goat, they're going to give some special milk or whatever. I don't know what the reason was. And along with that, there was a manjim. Manjim is a tree, by the way, okay? It's a tree that is grown in some places in Kerala, and it grows faster than the teak. And, you can make wood, or, the wood is hard to get in India generally, right? So they would come up with the schemes that you invest with us, we're going to plant mangium or we're going to buy goats over here and it's going to yield 100x. See, most people, people are struggling really to make ends meet, right? They get blinded by this. Somebody's promising me 100x. They put it in the paper. They put an ad in the paper. So whatever they have, they'll send over there. Just like, the boiler room stock era where people are calling and saying, buy this stock or something like that. All these people will send over there. And the guy who gets it, he runs away with the money. Very typical, right? Because there's no way a goat can yield 100x, right? And now everybody's saying that this goat and mangium are a scam. I always tell people, goat is an animal. Mangium is a tree. Both of them are not scams. The animal is an animal. It can't be a scam. There's only the animal didn't. There was a guy who made a company on top of it, sold some marketing material and told you to invest with him, and he ran away with your money. At that point, you can't say the goat is a scam.
Yeah.
Goat is just an animal. So same way I tell people, Bitcoin is a hash address. It's just ones and zeros. There's nothing. Bitcoin doesn't promise you interest. It doesn't give you any of these things. Some guy told you that I am something with Bitcoin and, Bitcoin, you missed it. So people are always thinking, Bitcoin used to be $100. It has become 20,000 today. I missed the upside. So there's this new coin coming or this new guy who is telling me that I will give you something like Bitcoin, but it's going to give you 1000x. All right. So you actually believed in the marketing and you invested in him. Now you're complaining that Bitcoin did it or did it. No. Bitcoin is Satoshi's paper is very clear. I'm just an address. Okay. You can hold me or you can send me. That's it. I'm not going to give you interest or any of these things. So scams in the sense, so there was this, the FBI's number one wanted person is this lady called Rujika, somewhere from Europe. She made something called a world coin, all right, 4 years back. It's called world coin or something. I forgot the name though. And maybe it was making all these promises about how you buy this coin, it will go 10,000 times up, it will give you interest and all those things. And she collected $4 billion, it seems. I don't know what kind of marketing she used. I would really love to learn that. My wife to buy something from me or accept my ideas. Now, this lady, somewhere, she convinced people from India, China, Thailand, all over Europe to send her $4 billion. Some marketing gimmick, whatever that is. So when somebody does that, what happens is a lot of people are going to lose money, right? And after that, they say this whole thing is a scam. Like Enron happened in the US, right? People, Enron all those years, it was the smartest men in the room. I don't know if you've read the book. They're really smart guys. At the end of the day, they were doing levered trading, okay? They're traders. They're energy traders.
Yep.
Now, when you do trading and when you have leverage, there's always a chance that, when markets go against you, you're going to go bust. And all the people who had money invested over there, their 401ks, everything was in the Enron stock. And they're like, oh, stocks are a scam. Are stocks a scam? No. Enron, the guys who did the accounting, the PwC or whoever was, it was Arthur Andersen, who was, the company, they went bust, right? So they did the scam, but in reality, people are saying, oh, our money was gone because of stocks. No, it was because of you wanted Enron to do, or you believe that they would do 100x or 1000x. If you had just believed in interest rates and put it in your money in US dollar and Federal Reserve, you would have got your 2% or 3% and it wouldn't have been a scam, right? Yeah. So that is usually what happens.
So it's basically, So the way you explained is now it's very simple to relatively easy to understand. The fault is not of the currency. The fault is the marketing on what you can achieve with that currency. The purpose is
new currency.
The purpose was meant to be the same. It's meant to be a medium of exchange, a store of value, but they are mobilizing money to probably trade that, leverage that, or do something else and make that extra return and give it back. And that's where people lose. And I think one of the reasons, I don't know whether this number is right. I made a note of it. Someone told me that about 10 crore Indians have some form of a cryptocurrency. Sounds too large.
But 70 crores right now.
all over the world.
70, no, Indians.
70 crore Indians have. Okay.
Not 70 crores, sorry, 7 crores.
7 crores.
10 crores,
7
yes. 10
Yeah.
crores. 7 crores is the number. Sorry. 70 crores.
That's fine. The conversion.
Nowadays, I've lost crores, and once we move to US, I've
Sorry,
lost the touch of crores.
So,
Yeah.
so 7 crores, it's a large number. And I suspect
It's more than equity. It's more than equity.
Oh,
Way
far more than equity. Way
Far more than equity.
And some of this money, I believe, goes into what are called stable coins, which give a rate of interest. Now,
Stable coins don't give interest, though, okay? Stable coins do not give interest.
okay. So explain us this. So this is a good question. Just tell us, what are these interest schemes that people are putting money in? And are they any genuine ones or red alert?
Okay. So let's go through that, okay? So what happened was, so Bitcoin came, right? So initially, what Satoshi meant it to do was, it was a medium of exchange also. That was what his plan was. So in 2013, there were bars in the US, in New York, who would take Bitcoin in 2013 for a beer, okay? So at that time, Bitcoin was, this was when it was less than $100. So let's say a beer is $5. So 1 by 20th of a Bitcoin is a beer. Great. The problem was, now when more people are coming into a small cap stock, the small cap stock starts behaving like this. So let's assume you are selling beer, people have paid you Bitcoin. You have to give your supplier, let's say $100 or $90. You collected 100 equivalent in Bitcoin. But by the time you were going to pay your supplier, let's assume Bitcoin plummeted, let's say 50%, which used to happen on a regular basis. Even 90% drawdown on a daily basis used to happen at that time. Okay, it used to go down 90% in a day, not like in a whole year, no, in a day.
Wow.
So the problem is, when you're a merchant, you can't now pay him Bitcoin because your supplier is not taking Bitcoin. He gave you in dollars. So from a merchant, let's assume you are in business. You're a merchant. You don't want this volatile.
You don't want to take the risk that the value will change overnight. Yeah.
Right. Now, it's great if it keeps going up. Now it was worth taking the risk, but what if it goes down, which happens? Now you can't pay your supplier. So people who are in the business or in trading businesses or in real selling items, they don't want this. They just want to keep their small 10% of their profit. If I'm selling beer for $5, I just want to keep my 50 cents. I don't want to make $100 out of beer, right? I just want to be alive, do it every day. So the US dollar is better for them to do this business. So at that time, there came a concept of stable coins. So it is cryptographic. You can send it and all, but the value, let's say if I'm saying one stable coin, USDT was the first one, okay? So USDT means it's tethered. It's a company. They are issuing this coin, which is digital. What they said was, what we're going to do is, you bring us $100, we'll issue you $100 of this tether. Send it everywhere as a dollar. Every time you bring back 100 tethers, we will give you your dollar back, minus fees or whatever it is. Now, that makes sense from a merchant perspective. Why? Because merchants that are selling usually get charged by 4% credit card fees. If they're using a stable coin, their fees are like 0.1%, right? It makes sense for them. They're saving 4%. Now imagine you're Walmart and you're saving 4% on credit card charges. That's huge, right? So there's a stable coin that's issued by this centralized agency called Tether. Now, they made a promise telling that they will hold this in their vault. But in reality, what did they do? They started trading with this or investing this somewhere. So when you really go back to them, they don't have that money to give it back to you.
So if everyone came back to exchange, they could fall short.
Could fall short because they have started trading on the side. They are very smart, the leverage was happening. So now besides that, now when you have this tether, you know that a lot of people require tether. So you can start a lending and borrowing agency on it. Let's assume I started a lending company. You needed tether or you needed money. I'm telling, hey, I'll give you money. Interest is 15%. The guy who is in depositing, hey, you have some tether with you. Why are you making it simply lying in your pocket? Why don't you deposit with me? I'll give you 12%. So that was the concept of now borrowing. What is a bank? It's doing borrowing and lending, right? So centralized agencies came in this space and said, with this stable coin or even with Bitcoin, we will give you, there's a borrow and a lend rate. The only problem was many of these guys didn't do risk management properly. They lend at one rate, they're borrowing at another rate, they didn't, and they went bust. Okay.
Got it.
Again, the problem is this guy who didn't do the risk management properly. In olden age, many banks didn't do the risk management properly. They gave loan to somebody, and they gave to Vijay Malaya, they gave the loan. The loan is not being repaid, but the depositor has to be paid back. Now, where do they go for the money for this? In banks, what happened is the government does a bailout. In the crypto world, nobody is going to do a bailout. The guy goes bust. So this is the piece. Now, this is the centralized piece. There is a decentralized lending and borrowing in the crypto without a middleman that is happening. There are platforms that do that. What the platforms do is you can deposit in the platform. The platform will tell you what is your daily, lending rate, tell you what your borrowing rate is, and it will be giving that. But in that process, they will liquidate the price of this thing falls down. Okay. So there is a decentralized way of doing it. So centralized counterparties can always break your trust this way. And that's why there are decentralized exchanges and borrowing and lending platform. There is insurance nowadays to ensure that if you're putting and agreeing to a contract, the code takes care of it. So right now, if when many of these guys were going bust, let's say they owed you and me money, they were not paying us. Whereas all these decentralized exchanges, they were paying them. You know why? Because their collateral would be slashed at that very moment. The code, looking at the price, if things are falling, they're not going to give you that, it was Rahul. I'm sure he'll come with the money. It's Lehman Brothers, by the way. They will anyway come with the money. Eventually, to see Lehman is going bust, now I'm also going bust. Like, imagine I had collateral. I'm like, Rahul, Rahul is my friend. So I'm not going to liquidate him. And then to know that the price went down, now Rahul is bust, I am also bust. The it doesn't care whether you are Rahul or you are Nithin, you are Lehman or US government. If their collateral is going down in value, they will liquidate you on this.
Wow.
So because of that, these guys paid back all those guys correctly.
Okay.
Otherwise, they know their thing that was valued at 100, those guys will sell for 50.
So if we take the current case of FTX,
yes.
So that's centralized.
Yes.
They are raising whatever, they got the money, they issued the coins or whatever it was. And so if they had done the right thing, that money would have been kept in super secure assets. So when the coin comes back, they can give the money. But
the FTX is very different. Okay.
Is different.
FTX is a whole different saga. Okay. So let's try to explain FTX.
Okay. So before we go to FTX, just once more, if you can,
sure.
Just to revisit, in decentralized, what's happening is your coin is backed by certain assets and there is no discretion. If the value of the asset falls, it'll automatically keep adjusting at every level. So there's no favors, which avoids any big blowout.
Right.
In centralized, they're just people can play around.
Centralized lending and borrowing.
In the lending and borrowing.
See, decentralized. So decentralized finance, DeFi, is including not just lending and borrowing. There's trading. Okay. There's exchanges. See, exchanges are a place where you can exchange stuff. And in crypto exchanges, what do you exchange? You exchange crypto. You can buy Bitcoin or you can buy Ether. You can sell Bitcoin or you can sell Ether or whatever, all the other coins. So there's Coinbase and Binance, two big entities, right? You go there. So what happens over there is, let's assume you go to Coinbase. It's a centralized exchange. You are telling, I want to buy Bitcoin. You send $500 from your account. They bought Bitcoin. Same as a stock, right? You go to a broker, you buy stock. They have stock at the DTCC or the, what do you call, what is DTCC, the equivalent, the DMAT format. Okay. In the DMAT format, the shares are there. But you can never take shares into your possession. You cannot say, hey, by the way, I want to own my Reliance in my pocket. They'll say, bug off, It's going to be here. Whenever you want to sell, you can sell. Like if Rahul wants to sell, and I want to buy, I become the owner, but the Reliance share stays in the demat format, right? In the US also, it's the same thing. If I buy Facebook, I cannot tell them, you know what, tomorrow I want delivery in my house. They'll say nothing doing. It will stay with DTCC. It's a repository. And when I sell it to Rahul, it changes the ownership name from Nithin to Rahul for Facebook. In crypto, there are two things though. When you buy it in Coinbase, an exchange, you can keep it there. There is another piece where you can say, I want to keep possession of my coins. So in crypto, there is a saying, not your keys, not your coin. So if my coin is at Coinbase, let's say tomorrow something happens in Coinbase and they do some shitty stuff and they go bust, my coins are gone. All right. See, the guy might go to jail or whatever, but my coins are gone. Okay. Now, that is a very risky piece because as an exchange, realistically, he shouldn't take, like, nobody should take your Reliance share and hypothecate that, right?
Yeah.
Like Bombay Stock Exchange shouldn't be hypothecating that and buying something with that.
That's good.
And Coinbase shouldn't also be doing that. What happened in FTX was, that's also an exchange. You send money, there was Bitcoin. The screen, the dashboard is showing that, hey, Nithin, you have 100 Bitcoins. But realistically, what happened was they took that 100 and gave it to somebody else.
Got it.
The dashboard was showing that you have the money.
Okay.
Even the old bank runs where bank would store your money, fractional reserve, you're thinking the bank has the money over there. No, they have given it to somebody else. And if that guy can't pay back, they really can't pay you back.
Cascading effect.
Cascading effect. So realistically, what they did is they can take your money and do something. And that's what they did. They took user deposits and did something else with that. They did whatever.
So this is, so the crypto, the Bitcoin, etc., they're getting a bad name primarily because someone came up with this nice idea which sits on that cryptocurrency thing, but it's ultimately a fraud or a scam because you're violating the trust if someone's bought. So, you know, the classic example in India was in the 80s and 90s. You bought shares, the broker kept the shares. The broker could play the share and hope to deliver it back to you. So if you were smart, you would notice the share number is changed. You know, the folio number is changed or something is changed. But that's exactly it, right? And if you're
many brokers in India went bust at that time. Remember?
Yeah.
I don't know if you still remember the whole Ambani thing. He asked for delivery. Remember, everybody was shorting. Brokers were using our shares, shorting it. Yeah. And when Dhirubhai Ambani delivery, literally every broker in the 80s, that 90s, they went bust. Because they were playing with it. They were expecting that it will go down because I'm shorting. They forgot that what if the guy who buys saying that I want delivery.
My shares back. Yeah.
Give me my shares back, right? Classic case. See, in the traditional world, what happens is there's a lot of regulation around this. So many of these things happened long time ago. It's not happening today because it's considered criminal and all those things.
Yeah. And systems have improved around this.
Systems have improved around it because we went through this. There was this, all this crypto bust you're seeing today, it happened in the traditional US stock world, India stock world. All these things have happened.
Yeah. Now that when you put it this way, it seems a lot less like the Wild West. This is something that happens in in the learning curve and the growth phase of every asset class. So this guy ran a scam at the FTX and whatever he used that money.
He ran an exchange. What he did is he ran an exchange. An exchange, you know, they should see they have a golden egg laying goose. They should just collect the eggs every day. What this guy decided was he'll kill the goose itself. Yeah? See, exchange is making fees. That's how they make money.
That's right.
What he decided was he'll take the deposits and he'll use that to trade better on the side.
Even more money.
But that all works fine when the market goes up.
Yeah.
When the market goes down, all these bets are off.
When the tide runs out, right? That's the thing.
That's when you see all those naked guys swimming.
Naked guys.
Now right. you just saw these guys were naked. They were swimming. The tide was there.
Yeah. So you are very well clued in this crypto world. I know that. right?
Right.
You're speaking all over the world. You're invited to all these big, massive conferences, etc. What's the reading from inside the crypto world of what's happening right now?
Personally, and from my perspective, I think it's the right thing that's happening. It's bad for the name is going bad because people have like 1 million depositors lost money in this whole FTX.
It's very sad.
It's very, very sad. Okay. Now, many of these guys might be only putting $500. There are very big funds. Ikigai, the fund, I think they might have lost at least 50 to 100. Many big funds also have lost money. Okay. Ikigai guy made an apology saying it's my mistake. I never expected this. Like, think of it. Sequoia, the largest VC in the world. Even 2 weeks ago, on their front website, their main this thing was what a great deal they invested in, Sang Bankman-Fried and FTX. They took it down, by the way. Okay. They were telling how every partner wanted this deal. And they invested 150 million or something into it. All right. There's Tiger, there is SoftBank, there's Sequoia, and there's Tom Brady. All these guys, and big ads also on Super Bowl day, ads on how you have to be in. You have to be on FTX.
Wow.
Now,
and if they had done a little bit of due diligence, they would have come to know what's happening, right? Just a little bit of.
Supposed to, right? See, that's the whole thing. You're expecting them to do due diligence. It's like this, okay? Let's assume you make this small guy. Let's say you graduated out of college. You make this great project. You go to a bank. They will never give you the money, but they would give Vijay Malaya
all the money,
crores and crores, right? The same thing, okay? You go to Sequoia with any idea, they'll be like, oh, you don't have the pedigree, or we don't believe your story, or do this and come, do that and come. They easily gave away 150 million is nothing for them. Their last fund is they're telling, they made a statement that that fund we made 7.5 billion, so 150 million is nothing. But still 150 million is hurting. It's hurting the reputation, right?
And a lot of people must be riding the coattails of Sequoia and investing in that, right?
Sequoia is invested in it. You're assuming at that point that guy has done some diligence, right? Those guys with all their analysts and all this stuff that they say.
So when you say it's a good thing, you basically mean that it's another round of cleanup that's going to happen, I assume.
These I always think that bad players have to be weeded out, okay? Because otherwise they're bad for the industry. Like Sam Bankman-Fried was really bad for the industry, okay? So this guy, realistically, even with the user money, forget the fact that he's used it. See, he was using that to name stadiums, FTX name stadiums. What is that? It's user money, right? And then he was using it to donate to political people. Okay, so the last election cycle, he gave 120 million to the Democrats.
$120 million.
120 million. So he was buying
short of that would be what, 1,000 crores. 1,000 crores.
Oh no, more than that, right? Into 80, right?
Into 80, yeah.
8,000. Oh yeah, 108,000. Oh yeah, in crores. Yeah.
About 1,000.
1,000 crores. Right, 1,000 crores. Yeah. I always forget this. But see, and then this guy was yelling for regulation in the crypto markets. Okay. All right. At least hold yourself close to that standards, right? This is like, the Leonardo DiCaprio saying, what, we have to save the environment, and he will take a jet, his personal jet, and go and explain in Davos to tell everybody else, you shouldn't be using those gas guzzlers. You shouldn't use those things. And he's taking his personal jet, like the Al Gores and these Leonardo DiCaprio. People are like, oh, same thing. Sam Bankman-Fried is the same thing, if you ask me. Oh, we have to have regulation to protect all these people. Hey, boss, first you do the basic stuff required, man.
That's right.
The basics. Forget, when you're trying to hold other people to standards, at least do some basic piece, right?
Yeah. So, I think we can go tremendously in detail, but, we have a little bit of a time cap.
Sure.
So let's move ahead. I think I've got a good sense of how you explain the cryptos, relatively easy to understand. The difference between what's a scam, a fraud, and what the currency or it was medium of exchange and store of value. So that's helpful. Now, tell me, for people, and we know a lot of Indians are involved in cryptos, small way, big way. When you think of cryptos, as a store of wealth or a potential generator of wealth in the future, how should one think about creating a crypto portfolio?
Okay. See, right now, if I were to create a portfolio, like we'll look at from a stock perspective itself. Okay, let's assume we were doing the Nifty for India. Let's say Nifty 50, right? It's 50, right? It's a 50 top stocks, right?
Yeah, 50. Yes, 50. Yeah.
Now, even in that, I would say the top 10 are like the 80% of Nifty 50. I would say top
Most
10.
likely, yes. Yeah.
Most likely,
yeah.
right?
Yeah.
So if you really want to be kind of safe and conservative, you really want it only in those 10 stocks, right? You really don't want your money in the bottom 10, right?
Yeah.
So if you're putting money in the bottom 10 or outside 50, you are really hoping that, hey, this goes up like crazy at that point, right? The problem with that is it can go down also like crazy. So Bitcoin, when it goes up 2 to 3 times, all these shit coins, altcoins, or whatever you call them, they can go up 10 times, 20 times, 100 times. It when it goes up, but when Bitcoin goes down, 50%, 60%, 70%, many times these altcoins, they go to zero. They're wiped out, okay? Because they didn't have that much liquidity. They didn't have that many people. The network effects were not there. So personally, if I were to make a portfolio today, my majority, let's say 60 to 70% would be in Bitcoin, maybe 20% would be in Ethereum, and maybe 10% in Binance, or 1 or 2, maybe Polygon. By that time it comes very low, because that is safe way of investing.
So
that
like
is good enough.
In stocks, typically you say the largest chunk should be large caps, blue chips.
In the blue chips.
And the smallest chunk should be the risky assets. So you're thinking on those same lines.
Same lines. There is no doubt. The fundamentals of investing does not change, whether your asset class is crypto or your asset class is stocks or it's commodities. You go with the safe ones.
So the way you explained is very nice. And you use words like Bitcoin, we all understand. Ethereum, we spoke about. The third
Binance.
one is Binance. Yeah. Okay. So that's
Binance is a centralized exchange, and if there's a centralized person involved, but still they've been in the space long enough. Like as I said, the 3-year track record is there.
And are they transparent? They disclose where the money is kept and all that.
They're not. They are not everything, but they're a centralized exchange. Okay, they're centralized, but they have other pieces of it, and CZ has been in the space for a long time, so you're just trusting. There's a trust piece here.
We all trust the paper currency, so in God we trust.
But in Bitcoin, the crypto world, they say don't trust but verify, because everything is don't trust but verify it. But in Binance, you can't verify everything, but you're assuming, that's why I said less than 10% of the 100. 90% has to be in Bitcoin and Ethereum, and 10% play with it. What is the worst that can happen, kind of thing.
So I guess this also sort of it's in a stock market world, we'll say it's a very concentrated portfolio. You have the asset allocation right, but it's very concentrated. So how does one protect one's crypto portfolio from going bust? So typically in stocks, you would say have a total of 20 stocks, and again, large cap, mid cap, small cap, do your due diligence, review it every quarter, every year. So how would you think about that when it comes to crypto?
I look at crypto is a little different, okay, when I look at it that way. See, this is where crypto diverges from stocks. So let's assume there's a stock like Lehman or Bear. It's going down. If the guy is going down, there is no comeback that's possible after that. The name, the reputation is gone. Means nobody's going to give them any more loans. This guy is not coming back. Means it has to be written down, right? Very few companies have come back. It means there's a bankruptcy that happens where the equity guy is, completely gone. And it's a new set of guys. Maybe they can come back, right? So in crypto, it's like gold. Okay, let's assume the gold price. Gold prices was $800 an ounce in 1972 after this whole thing happened. This embargo and the energy crisis happened. And from 800, it went again back to $30 or $60. It took 20, 30 years for it to come back, right? So in crypto, every 4 years, if you really look at the cycle, there's 2009, it started at 1 cent. It went to The initial one went to 10, it fell back to $1 or less than that, then went to 100, fell to 10, went to 1,500 and 1,400 in 2013, went to 200, stayed there till 2017. From that point on, it went to 20,000. Then it came back to 3,000 in 2018. And then in 2021, it went back to 68.
60,000.
Now it's at 16. So there is no company behind it. There's no revenues. There's no hierarchical structure. So the difference here is, this is like that goat. The goat is there. All the people who came providing the services went bust, but the goat is there. The goat will be there. In the stock world, if something like this happens to a company, there is practically no comeback.
Yeah.
So here, there is that comeback. Now, to protect your portfolio, you'll have to buy some kind of options or something like that. But then getting into very complex stuff, and options can expire, and your portfolio can go down even after that. So that is very hard. If you're trying to get a pure hedge out of it, that'll be exceptionally hard.
Yeah. And when you think of this portfolio, you typically think long term, right? From
Yes.
all my discussions with you say you're an investor, you're not a trader.
No.
Primarily, that's how you think about cryptos. That's unusual, right? That's not very common. Mostly you come across
Most
crypto
people
traders.
trade. Most people trade, whether it's stocks or crypto.
Mhm.
They're trying to make that, the quick buck, if you ask me. Trading is okay if you're at a place where there are zero taxes. If you're at a place like whether you're in India or US, you have taxes. So I always tell, I give people an example. So let's assume you got Bitcoin at 0, and it's, let's say, trading for 20,000 today. If you sell it, 50% is taxes. All right. Realistically, it has to fall below 10,000 for you to really make money. Right? 50% you paid taxes.
Yep.
So what you really got is only $10,000. Now, if you want to again trade and make money, better fall below 10,000. Otherwise, the better thing was just hold on to it.
Hold on to it. Yeah.
Like, I give an example. There's Amazon. If you had put $1,000 in Amazon in 2000 after the IPO, last year it would have been worth more than 1.1 million actually, if you had never traded. The problem was, by the time it becomes 10x, most people will take the profit, right?
They will take the profit, yes.
The question is, were you good enough to wait that 15 to 20 years to see the 1,000x or the 10,000x? That was where the question is. Could you wait? And if these things, I think, you go to work, you put your money in, whether it's a stock or index and all, it should be for real old age or maybe passing on to the next generation. You shouldn't be like, oh, my stock is up or my portfolio is down. Let's not worry about that. Do you believe in Nifty? If you believe in the US market, buy S&P. If you believe in crypto, just buy Bitcoin or Bitcoin and Ether combo.
So let's say it's a concentrated portfolio. And let's just come back to Bitcoin. What kind of signs should we look for that something's going wrong with Bitcoin?
So some of the things that people use are, so Bitcoin can stay in your personal address or it can be an exchange. If a lot of people are moving it to an exchange, then you know that people are trying to sell or do something. Holding in your wallet. So there are companies that do these analysis and give it out. More people are moving it to the exchange. More people are moving to their personal wallet. If they're moving to their personal wallet, it means that they're trying to hold. They're moving to an exchange, that means they're trying to sell. Okay. So that's one number that you can look at. In Bitcoin, there's something called halving that happens. Okay. Right now, the rewards or the mining rewards are 6.25 Bitcoins for every block that is written. Okay. Now that is going to become 3.25 in 2022-23. And usually after every halving, there is a big run-up. If you look at the last one or the previous one. So this time the run-up was in 21-22. The halving happened in 20. The last halving was in 16. 17 was where the run-up happened. The previous one, so earlier you used to get 12 Bitcoins or 12.5 Bitcoins per block. See, that is one piece here. So when you go to any agency like the bank and all today, what they do is they maintain a ledger for you, right? In reality, when I send you money to my bank, they're debiting my account, crediting your account. It used to be in this paper books long time ago. They have made it into a database. So fundamentally, what they have is they maintain a database or a ledger. So what is happening is like Google, they have a database. They make money because they have the data. Because when people want, they store this data. They were the people who stored it. When they're reading it, they get paid. In the crypto world, also, there is a database. It's maintained by all of us in the field. And the person who gets to write on the database, he gets paid because that is maintaining the security or the integrity of the system. So that's what this mining rewards in reality is. It's a payment for maintaining this database.
So one signal is when people are moving money from their wallet to the exchange, implying it may be for sale. That's a red flag. Any other red flag that one should look out for?
Red flag, like interest rates rising. Let's assume the government is increasing interest rates. That is going to depress literally every asset, not just because now money is going to move from assets to
the
treasury.
opportunity cost of money is increased. So why would
at that time, every asset, like you take stocks, commodities, every commodity is going down. Every asset at this point, from price perspective, is going down.
So
interest rates
so they become pro-cyclical. The whole idea of that they'll be counter-cyclical, at least this year, did not work out very well, right? For most people.
So that is one of the reasons. That is one way you decide. Do I want my money in crypto at this point? Can I wait when they are, bringing the interest rates to zero? Should I put more money at that time because it makes sense? The other thing is the number of users. Okay, when you know the number of users are increasing, which means that people are more buying. There's more demand. So Bitcoin has reached, I think, right now the 1998 users of the internet. That's where the number is.
Oh,
okay. So there's a lot more to grow.
Long way to go. Yeah.
Long way to go. Then the hashes, more miners coming into the system, more hash. The hash rate is a very big thing. That's one way of understanding more people are in the system kind of thing.
Okay. So some things you should look out for, it's getting better, and one or two things that something could be changing in the Bitcoin world. In terms of I guess it works the same way in Ether and all that. That's what you should be looking at.
Yeah, many of these things.
And these, is this available on the internet or some?
Many of these things, there are companies and people who publish these numbers, like Glassnode, and many research guys do publish these numbers for free.
Okay.
Some guys publish it in their newsletters. They refer to this. Obviously, you'll know it only after they publish it. And you can write your own tools, by the way. If you want to do all these things, this is all public knowledge, right?
You can write your own what? Sorry?
You can write your own tools, your own software to get this data out. Because, see, there is nothing that's proprietary over here. Everything is public knowledge. It's like how you read the data, right? So for that, you might have to write your own queries and stuff. These guys, what they have done, they've just run some queries on the addresses and stuff, and they're trying to understand what is happening.
Okay. Great. So you just mentioned that whenever the halving happens, halving is the reward for doing work. Halves every, do you say 4 years?
4 years, roughly 4 years.
4 years?
Yeah.
And that's succeeded by a rally in the prices. That's what the
usually
has said so far.
That's been the trend.
So my question to you was, how do you go about valuing, let's say, Bitcoin? In stocks, we look at a series of cash flow, project the cash flow, and discount it back, and you have a price.
Got it.
In Bitcoin, how do you go about doing that? How do you know that at the start of the year, or whenever it was 68,000 or whatever, was too high a price, and today at 16,000 whatever, it's an attractive price?
It's very hard because there are no cash flows. You can't do any like EBITDA or any of those things.
Yep.
So at that point, you look at gold. People still buy gold, right? Why do they buy gold? There's no interest rate for gold, right? But there's a mining cost for gold. So, and then you know that it's scarce. So you're more relying on the fact that governments will go back to printing money. They have to go back to printing money to get their votes and all those things, or conduct their wars or their welfare schemes. And at that point, every asset class is going to go up. We don't have to really worry whether it's Bitcoin. It's just that I personally believe among all asset classes, Bitcoin does better when this printing happens.
Got it. So I'm still trying to sort of dig that a little more. So is charting a better tool to get it? Because typically charting captures moves of
Momentum
people,
and
the action. So is that a better way to study pricing? The
See,
fundamental is not possible. It doesn't.
Right.
That's out of the
see,
context.
fundamental. See, there is a way of how I look at it fundamentally. I'll tell you how I look at it. I'm not saying this is the only way or this is the perfect way or this might even work. My general theory has been that Bitcoin has to replace gold. General theory, okay? So gold right now is a $10 trillion or $12 trillion market cap. Okay. So Bitcoin at its peak last year was 1.2 trillion. All right. 4 years ago, it was like 100 billion. And another 4 years ago, it was 10 million or 1 billion, right? Every time it goes up, in this rally, it is reaching closer towards that goal. Means the last year it was now it's only 400 billion or 350 billion right now. It's down, right?
Yeah.
Every new peak, it is touching a number that is higher than the previous peak.
Far higher. Okay.
And that has been my thesis from, let's say, 2014 or 15. My thesis has been it has to replace gold. Now, when will it replace gold as that flippening happening? It's very hard to predict it's going to happen next 4 years, 5 years, 10 years, or 15 years. I personally prefer, if you're in these kind of markets, get in it to be in it for 20-year terms. All right. And the key piece I would say is, do you really believe in the story? All right. Like even in stocks also, end of the day, do you really believe in Ambani's or Adani's or, the Infosys story? Or do you believe the Microsoft story? There is a story. Then there is a users using it. Then you can look at the EBITDA, because if you only look at cash flows, you might miss the story, and the cash flows could be something that's a faked cash flow. That can happen. A lot of people have faked these numbers. Okay.
Yeah.
So here, what is the story? The story that I believe is that people, humans, we are genuinely meant to be free and to take control of our own wealth or our own fruits of our labor. And we will get to that point. And along the way, there'll be so many obstacles, whatever forms, government, SEC, SEBI, central bank, Federal Reserve, they'll come with many other things that will make this hard. But eventually, people, they can't go against the will of the people. All right. See, like Uber, for example, they were planning to shut it down in New York. All right. The mayor was planning to shut it down. They're saying they'll allow 4 Uber cars a year because maybe he was taking money from the medallion guys. All right.
Medallion being the yellow cabs.
The yellow cabs, right? The yellow cabs. Well, when he feels that the people are going to vote against him for that, he ain't going to do that, right?
No way.
So Airbnb, when they started, one of the famous investors didn't invest in them because saying that, to rent a room in your house in New York it's something like a criminal offense. They never expected, but what if 4 million people start renting your rooms in New York? Is the government going to put 4 million people in jail because I have to please the hotel industry? So same way, this one as you look at it, 7 crore to 10 crore Indians are crypto. I don't think 3 crore Indians have stocks with them, right?
Yeah,
and stocks have been there. I don't think it's 3 crore Indians have stocks with them. So if 7 crore have some form of crypto, that means they have realized somewhere this is a money-making scheme or this is better. Like majority of the Indians have gold. They know that gold is better than the rupee. Somehow it is ingrained. So this is being ingrained to the new generation somehow. All right. Now, maybe they might buy the world coin in between, the pitfalls will be there. But eventually they will come and understand that this is better form of money and this is where we need to invest. And that piece is the story that I believe. And that is the human fundamental nature. We want freedom and we'll get there. And as part of that, more people will start coming in. And as part of that, this whole ecosystem will grow. The network effects will grow. And if you're early enough, you will be able to capture the bottom portion where that hockey stick piece, you will capture it. That is my general theory.
On that note, Nithin, thank you very much for the time you've taken to explain. And I must say that at least I've come out a lot more sort of knowledgeable about how this whole thing works. Because primarily, if you look at it from at a distance, it's a very confusing, very scary. But the way you correlated with how gold pricing is done, how you should construct the portfolio, and separating the fact from the scam and the fraud. I think that the whole piece, I think, clears the air a lot. We've run out of time, but we must definitely talk again because there's a whole bunch of things. We haven't even touched NFTs today.
No,
Right.
nothing. NFTs, DeFi, DAOs,
Yeah.
a lot of stuff.
Yeah. We'll do another session and touch on some of those. But for today, thank you very much. And been a wonderful discussion.
Thank you so much, Rahul. It was a pleasure being here.